Hi everyone. Since this is my last video of 2020, I thought that we could take a look back at this year in the Indian real estate industry. Today, we're going to take a big picture view of this industry and have a look at some important themes and developments that stuck out to me in 2020. One of the first themes to look at is PropTech. Before the pandemic, the use and adoption of PropTech in India was limited to listing sites and aggregators. 2020 accelerated the adoption of PropTech in India and moved it beyond the realm of simple aggregators and listings to far more advanced applications. Along with this increased adoption, the rate of investment in PropTech increased as well, with over $1 billion invested into PropTech firms during 2020. If you'd like to know more about how PropTech is changing Indian real estate, I spoke about it last week and I'm putting a link to that video up here. Another significant theme in 2020 was the change in private equity investments in real estate. Over the last 5 years, from 2014 to 2019, commercial real estate in India went through a bit of a boom in terms of office absorption, mainly due to investments from private equity players. However, this changed in 2020 with private equity investment in real estate contracting by up to 30%. A report from Savills expects the total private equity investment in real estate this year to come out at around $4.5 billion, and they do expect this to rebound next year with a special emphasis on warehousing and data centers from private equity investors. The report also suggests that warehousing could be the way forward for large institutional investors, so that could also be something to look out for. Another important development has been the expansion of the REIT or real estate investment trust market in India. 2020 saw India's second REIT in the form of Mindspace Business Parks getting listed, along with announcements from Prestige Group, DLF, and even Brookfield about their own listings in the future. Significantly, DLF's proposed REIT, which could become the largest REIT portfolio in the country, is in partnership with a sovereign wealth fund, GIC of Singapore. The positive performance of the existing REITs on the market also attracted interest and investments from mutual funds. Mutual fund investments in REITs grew threefold year on year to amount to about 735 crore rupees in the first half of 2020. Going forward, this could be an indicator of things to come in the future, with some developers even looking at a build, lease, and REIT model of expansion for themselves. Next, we come to government relief measures and incentives. To give a boost to the real estate sector in 2020, state governments announced huge cuts in their stamp duty rate. For example, in Maharashtra, these rates were cut down to 2% until the end of 2020 and 3% till the 31st of March. Further, the government also announced that they would allow transactions at up to 20% below the circle rate to take place without any income tax penalties to increase the transaction frequency and give a boost to consumers. Another important development here was the late surge in residential demand seen towards the end of 2020. Although residential sales have fallen 47% year on year, there was a late surge in demand in the last quarter of 2020. According to a report by PropTiger, residential sales saw an 85% increase in the third quarter of 2020 as compared to the previous one. This could be due to a short-term drop in demand being followed by a change in preferences and needs as work from home changed the lifestyle and requirements of a lot of consumers. A lot of reports have characterized this as pent-up demand, with consumers waiting through the uncertainty of lockdowns to make a decision. Along with this, work from home and the amount of time people have spent in their homes in 2020 has also brought the decision forward for a lot of consumers looking to purchase a home. This pent-up demand was further accelerated by limited time stamp duty offers in certain states, incentives by developers, and the prevailing low home loan interest rates in the current market. For example, in the month of November 2020, Mumbai recorded the highest number of registrations in November that it has seen in the past 9 years. There is, however, uncertainty going forward, with work from home and hybrid working models seemingly here to stay in some capacity or the other. Another important theme here could be possible consolidation amongst developers in Indian real estate, especially in the consumer housing segment. Subdued sales, rapidly reducing margins, and a high degree of leverage were plaguing the industry even before the pandemic. After the lockdowns, the larger, more corporate developers with a strong brand value, track record, and most importantly, access to institutional capital are the ones that could stand to gain market share. The most stressed and weaker players in these markets could look to divest their portfolios either through land sales or joint ventures. On the other hand, the largest, more corporate developers are able to weather the storm and even have the option of divesting by listing their portfolios in the form of REITs. Alright everyone, I hope that this video served as a quick summary of all the major developments in Indian real estate in 2020. Given the uncertainty we've gone through this year, it's going to be interesting to see where this market goes in the future and what other potential developments could take place. As always, thank you so much for listening, and please do let me know what you think in the comments below. Do remember to like the video and subscribe to the channel if you enjoy the content. Wish you all a very happy new year, and I hope to see you soon.